Gold. It's more than a metal, it's a mirror. A reflection of how humanity feels about the future. When people feel safe, they invest in dreams. When people feel uncertain, they return to something ancient, something they can hold. As we step into October, I can sense the tension, markets shifting, currencies trembling, governments printing and promising, while people quietly look for shelter in stability. And that's where gold always reappears. You see, gold isn't rising or falling because of luck. It reacts, like a pulse, to the heartbeat of the global economy. And right now, that heartbeat is uneven. Inflation is slowing in some countries, but in others it's still eating away at savings like a silent virus. Interest rates, the levers of modern finance, are at historic highs. And yet growth is hesitant. Tech stocks surge, then stumble. Oil prices fluctuate like mood swings. And amid all of this, one question keeps echoing in the minds of investors. Is gold the safe haven again? To answer that, we have to understand the system we built. Money today isn't just paper, it's trust encoded in algorithms, in policies, in the faith that tomorrow's world will honor today's promises. But when that faith shakes, gold becomes more than a shiny rock. It becomes a psychological anchor. If you look at history, every major shift, every crisis, every reset, there's always been one constant. People turn back to the elements that don't break. Not because gold grows or innovates, but because it doesn't lie. It simply exists. Now, in October, we're entering a crossroads. Energy prices are pressing global production. Central banks are quietly adjusting their reserves. Nations are racing to protect their currencies. And in this silent race, gold is the scoreboard. This isn't about predicting numbers, it's about reading human behavior. Because markets are not machines. They are emotional networks powered by trust and fear. And as trust wavers, gold glows brighter. So in this video, we're not just talking about charts or prices. We're decoding the psychology of value, why people, once again, are turning their eyes to the oldest form of wealth in the world. Because maybe, just maybe, gold doesn't change. We do. People often think technology kills the old. But the truth is, technology transforms it. For centuries, gold has symbolized permanence. Unchanging, reliable, eternal. But in an age where algorithms decide prices faster than human thought, even gold is learning a new language, the language of data. Artificial intelligence now influences global trading patterns. Every second, millions of micro-decisions are made by machines analyzing inflation curves, commodity flows, and social sentiment. In this digital symphony, gold no longer moves by human emotion alone, it moves by code. And yet, ironically, that code is written by humans. By our hopes, our fears, our hunger for control. You see, gold used to be stored in vaults. Now, it's stored in clouds. Digital gold, tokenized assets, decentralized reserves. Even central banks are experimenting with digital currencies. But they all share one quiet truth. They still measure their worth in comparison to gold. That's the paradox of progress. The more advanced we become, the more we look backward for certainty. In technology, we talk about resilience, a system's ability to withstand failure. Gold has been humanity's resilience for 5,000 years. But now we're entering a phase where information itself is the new gold. Data is mined, refined, traded, just like ore. The companies that dominate the world today aren't mining in deserts or mountains. They're mining in networks, in human attention, in behavior. Still, amid this storm of innovation, people ask, if everything becomes digital, what happens to something physical like gold? The answer is balance. Gold represents the tangible, the proof that value can exist outside the screen. Technology represents the intangible, the belief that value can exist anywhere. In a world obsessed with speed, gold reminds us of patience. In a world built on artificial scarcity, gold reminds us of natural limits. In a world driven by volatility, gold whispers stability. That's why I don't see technology as gold's competitor. I see it as its mirror, reflecting what humans desire most: trust. Maybe one day, we'll measure wealth not by how much gold we have, but by how much energy we can store, share, and renew. But until that future becomes real, gold remains our calibration point, the baseline of belief. Because before we had algorithms, we had instincts. Before we trusted systems, we trusted the shine of a metal that never rusted. And maybe that's why gold still matters, not because it powers machines, but because it powers meaning. Gold doesn't live in isolation. It breathes the same air as nations, economies, and leaders who make decisions that ripple across the planet. Every time a country tightens its borders or shifts its trade policy, gold reacts, not because the metal changes, but because trust does. In October, that trust feels fragile. Trade routes are being rewritten. New alliances are forming not on ideals, but on necessity. And in boardrooms across the world, central bankers quietly ask the same question: how much gold do we need to feel safe? When governments print more currency to fund recovery or conflict, the public often sees numbers, trillions, billions, percentages. But behind those numbers is a story about confidence. And when that confidence fades, gold becomes the quiet vote of no confidence in paper promises. Look at history. Empires rise on debt and fall on distrust. The Roman Empire stretched as far as its silver coins were trusted. The modern world stretches as far as digital currencies are believed. When belief falters, the ancient metal takes the stage again. But this isn't about fear, it's about balance. Gold has always been humanity's way of saying, let's slow down. When nations rush to outspend or outcompete one another, gold reminds them that real value isn't printed, it's earned. Even today, while countries race for dominance in AI, energy, and defense, there's a quieter race happening underneath. A race to accumulate stability. China's reserves are growing. Russia diversifies out of dollars. The US holds steady, confident in its currency but cautious about the storm. Geopolitics is the wind. Gold is the compass. When that wind shifts, through elections, sanctions, or global crises, gold points to where stability hides. And in October, those winds are unpredictable. That's why understanding gold isn't just about economics. It's about psychology and politics, the invisible forces that shape how humans assign value to safety. And the more uncertain the world becomes, the more that safety gleams. Every investor, every economist, every algorithm, they're all chasing one thing: certainty. But certainty is emotional, not logical. For centuries, humans have turned to gold not because it produces income, but because it produces comfort. A strange kind of emotional gravity that no digital token, no number on a screen can fully replace. Gold doesn't promise profit, it promises permanence. And permanence is power. Think about it. The global economy today runs on invisible things: lines of code, data packets, online transactions that move faster than thought. It's efficient, yes, but it's also fragile. When servers go down, markets freeze. When confidence wavers, everything collapses. Gold doesn't crash, it doesn't vanish in an update. It just sits, heavy, patient, silent. That silence is what people trust. In October, when news headlines scream uncertainty about currencies, elections, wars, or debt, investors instinctively reach for something that doesn't talk back. That's not superstition, it's biology. Our ancestors traded shells, stones, and metals not because they were shiny, but because they were real. We're still wired the same way. No matter how advanced we become, our brains seek tactile proof of value. Gold is that proof. Behavioral economists call it the anchoring effect. When everything moves, the mind clings to what doesn't. That's why gold feels safe, even if it's just sitting there. And yet, that feeling, that trust, is what sustains markets. Without it, numbers lose meaning. So when people say, gold has no yield, I smile. Because sometimes, yield isn't the point. Sometimes, peace of mind is the yield. Gold is the story humanity tells itself when it needs to remember stability. And this October, as algorithms trade faster and economies shift faster, people are quietly turning back to that story. Not because they've lost faith in progress, but because progress always needs something steady to stand on. And gold, after all these centuries, still stands. Forecasting gold isn't fortune-telling. It's pattern recognition, the same kind that drives rockets, electric cars, and AI systems. If you observe the data closely enough, the market starts to whisper before it speaks. And right now, it's whispering caution. In early October, we're standing at a rare intersection of monetary restraint and global uncertainty. Interest rates remain high in most economies, a deliberate effort to cool inflation. But high rates also slow growth, tighten liquidity, and push investors to reconsider what's safe. Let's interpret the signals together. Signal 1. The dollar's weight. A strong US dollar usually suppresses gold. But lately, we've seen a decoupling, gold prices holding steady despite the dollar's resilience. That means the market isn't just reacting to numbers, it's reacting to emotion. Fear of long-term instability. Signal 2. Central banks accumulating. Over the last few months, emerging economies have increased their gold reserves. That's not speculation, it's strategy. When nations hedge against currency volatility, gold becomes the quiet equalizer. Signal 3. Inflation expectations. Despite public optimism, inflation is far from gone. Energy prices are ticking upward again. Supply chains remain fragile, and consumer sentiment, especially in Europe, still reflects anxiety. Gold thrives in that emotional vacuum where people stop believing in headlines and start believing in hedges. So where could we go from here? Let's visualize 3 scenarios. The stability scenario: inflation softens, interest rates plateau, and gold maintains a steady range between its support and resistance zones. This represents balance, a calm surface hiding strong undercurrents. The bullish scenario: energy prices rise, the dollar weakens, and inflation data surprises on the upside. In that case, gold could surge, not explosively, but persistently, as investors rebalance portfolios for safety. The correction scenario: optimism returns, tech stocks rebound, and capital exits commodities for higher risk assets. Here, gold would retrace modestly, not because it lost value, but because fear temporarily subsided. But make no mistake, even in a correction, the long-term narrative remains intact. Gold's value isn't in its price, it's in its persistence. So my October forecast isn't about predicting a number. It's about understanding a behavior. When trust in systems wavers, gold becomes the system. That's not speculation, it's psychology, powered by centuries of repetition. And as we move through this month, every economic headline, every policy speech, every data release, they're all just different ways of answering one timeless question. How much stability do we really believe in? If the 20th century belonged to oil and the 21st began with data, then the future belongs to energy. For thousands of years, gold was wealth because it was rare and immutable. But the definition of rare is changing. Today, it's not about what sits in vaults, it's about what powers civilizations. Solar energy, battery storage, lithium, nickel, hydrogen. These are the new precious elements, not because they shine, but because they sustain. We're entering the era of energy capital, where value is defined by our capacity to store, transport, and renew power. And yet, gold still has a place. Not as a currency, but as a compass. A reminder that even as we chase the future, we need something stable to measure progress against. Think about it. When we launch rockets into orbit, we calculate in grams and kilograms, physical constants. Gold, in its own way, is a social constant. It tells us how much we still trust ourselves. One day, humanity might look at lithium the way we once looked at gold, a core of innovation, a foundation for stability. But the underlying truth remains. Value isn't in the material, it's in the meaning we assign to it. That's why, Even as I build rockets and AI and cars that run without fuel, I still admire gold, not for its shine, but for its silence. It doesn't compete. It doesn't promise. It simply is. And in a world that moves faster every day, sometimes stillness is the rarest commodity of all. So, as we move forward into new economies, new technologies, new definitions of wealth, remember this. Gold reminds us of the past. Energy defines our future. And trust is the bridge that connects them. Because no matter what form value takes, coin, code, or current, it all comes down to one element we can never mine. Trade, or fake. Belief. And as long as belief exists, gold will always have a glow, even in a world made of light. So here we are, at the end of a conversation that isn't really about gold, but about us. We've explored the forces shaping its price, technology, politics, emotion, and time, but the deeper story has always been about belief. Every chart, every forecast, every ounce of gold, they're all reflections of what humanity values most: stability, trust, and meaning. You see, wealth isn't measured by how much we own. It's measured by how well we understand value. And value, real value, doesn't come from speculation. It comes from creation. From the energy we build, the knowledge we share, and the future we design. Gold has been our constant, a reminder that even in chaos, something endures. But the future asks for more than endurance. It asks for imagination. Because we can't carry gold to Mars. We can't store it in sunlight or plug it into a rocket. But we can carry ideas. We can build trust, not in metal, but in ourselves. That's the true evolution of value. So when you think about gold this October, don't just look at its price. Look at what it represents, the universal human need to anchor belief in something solid. And then, ask yourself, what do I believe in enough to build on? Because the next era of wealth won't belong to those who hide value in vaults. It will belong to those who create it, in labs, in code, in space, and in each other. If this conversation sparked something in you, a question, a curiosity, a new perspective, then stay curious. Because that's where discovery begins. Subscribe if you want to keep exploring how technology, energy, and human psychology shape the world ahead. Not predictions. Not hype. Just truth, and the courage to look beyond the numbers. After all, the most valuable thing you can invest in is understanding.